Welcome back to another video. Today we'll be reviewing Heavy Finance, which is a regulated crowdfunding platform from Lithuania. This website offers you the opportunity to invest in agricultural loans for an average interest rate of 11.6% per year. In today's Heavy Finance review, I will walk you through the platform, share some of my own experiences from investing on Heavy Finance, and point out some of the pros and cons that you should consider when investing on this platform. My name is Jakub from P2P Empire, and if your goal is to become a more educated investor, consider subscribing and also hit the like button to see more content like this in the future. So Heavy Finance is a Lithuanian crowdfunding platform that is regulated by the Lithuanian Central Bank. This platform lists agricultural loans from which some are secured by state guarantee, some are secured by heavy machinery or land, and others are unsecured. On Heavy Finance, you can invest in loans ranging from 4 to 41 months, and the current average loan-to-value ratio is at 50%. What you should know is that the vast majority of loans are originated in Lithuania, followed by loans from Bulgaria and Portugal. So let's dive deeper into the individual loans to get a better understanding of what you are actually funding. Security is important, and you should be able to understand how your investments are secured. On Heavy Finance, you can invest in loans that are either backed by a state guarantee, pledge of assets, sole accountability, or a mix of those securities. What you should know is that loans backed by a state guarantee are rather rare on this platform. Heavy Finance has signed an agreement with the National Guarantee Scheme in Lithuania, which means that the state will cover up to 80% of the outstanding debt in the case where the borrower is not able to repay. Now, keep in mind that this guarantee is only valid for loans from Lithuania, and it is often offered in connection with some collateral such as land or heavy machinery. Also, keep in mind that loans that are backed by the state guarantee are marked with a check mark on Heavy Finance. The second type of loans is backed by some kind of collateral. Typically, it's either land, heavy machinery, or some type of receivables. To find out more details about this type of security, head over to the detailed information on the dedicated project page. Under the document section, you will be able to review relevant files such as appraisal reports or any other official documents that describe the collateral. The third type of loans are loans that are backed by sole accountability. These loans have a maximum loan amount of 10,000 euro. There is no collateral involved here, but the borrowers are personally reliable to repay the debt. Apart from the securities, you should also educate yourself about the purpose of the loan as well as the loan term and the interest rate. Some loans come with a dynamic interest rate, which means that the interest rate depends on your investment amount. In short, the more you invest, the higher the annual interest rate. Heavy Finance does also provide some information about the borrower, including the last financial report or entry from the business registry. Alright, but hold on for a second. Why don't the farmers go to the bank and get a cheaper loan? Paying double-digit interest rate for secured loans is a bit too much, no? Well, there are a few things to consider here. Banks are not necessarily used to work with heavy equipment as collateral, which means that they don't even want to deal with the farmers in the first place. Heavy Finance offers flexible payment options, which means that the farmer is able to repay the loan after the crop has been sold, for example. So this is something that farmers value and banks don't. Heavy Finance also offers 100% financing, while with banks the farmer would need to put a down payment. In addition to those points, farmers may repay the loan after 4 months without an early repayment fee. This is also something that banks don't offer. Last but not least, Heavy Finance is much faster in processing loan applications. There were some cases when the platform issued the loan the same day after signing the agreement. This helps farmers to solve problems like fixing a tractor or buy some more fertilizers. So while the farmer does pay interest for the loan, the return on the investment is much higher, which means that the farmers can afford double-digit interest rates. In addition to that, farmers can be also compensated by the governmental support scheme, which means that while you as an investor earn 11%, the farmer might pay just 6% interest per year. So that's certainly something that you should also keep in mind when investing on Heavy Finance. Alright, now let's look at the usability of the platform. To be eligible to invest on Heavy Finance, you have to reside in Europe and open a Paysera account. Paysera is a Lithuanian payment institution that has an electronic institution license. Paysera verifies your identity and creates a dedicated IBAN account for you, which will be connected to your account on Heavy Finance. The benefit of this setup is that your funds are segregated from heavy finance and that you don't need to verify yourself again after you open your Paysera account. Heavy finance does also offer an auto-invest feature where you can automate your investments. You can choose the investment amount, interest rate, loan duration, risk rating, security type, LTV, as well as the country in which you want to invest. The minimum investment amount on heavy finance is €100, which is very reasonable for most investors. While heavy finance also offers a secondary market, there is not so much activity here, which is why you should not primarily rely on this feature. Also, the secondary market trades come with 1% fee, so it's not for free. So now let's talk about the transparency for a minute. As already mentioned, heavy finance is regulated by the Central Bank of Lithuania. That's a rather underrated benefit that many investors don't pay too much attention to. Being regulated in Lithuania means that the platform does need to comply with certain rules and best practices. Proper risk disclosures, segregation of funds, publicly available financial reports, as well as a solid legal documentation are a few measures that not all crowdfunding platforms follow. On top of that, the CEO of Heavy Finance, Laimonas Noreika, has previous experience in founding crowdfunding platforms. He is also the co-founder of FinB, which is a popular platform in Lithuania. In addition to that, he made a very good impression on us in one of our recent P2P talks, where we talked a bit more about agricultural loans and the development of heavy finance. If you are interested in reviewing the audited financial statements for 2020, you can find them in our review on P2P Empire. When it comes to the transparency, you should also have a look at the statistics. Heavy Finance launched a dedicated statistics page right from the start. You can get a brief overview of some of the relevant data, such as the average interest rate, average investment amount, as well as some additional performance metrics concerning the number of funded or delayed loans. When it comes to the support, Heavy Finance has been very responsive to all of our requests over the past few months. The support responded within a few hours with a very comprehensive answer to our questions, which is something rather rare in the industry. Okay, now let's talk about some of the pros and cons. As I've mentioned before, in order to invest, you have to have a Paysera account. If you don't have one yet, it can be quite frustrating to get one open. When I created mine, for example, it took a few days to get everything sorted as the app had a bug in their system while I was creating my account. If you plan to invest money today while not having a Paysera account yet, it's likely not going to happen. You should expect at least a few days to open a dedicated account with Paysera. Another con is that the appraisal reports or any documentation in regards to the collateral are available only in Lithuanian, Bulgarian or Portuguese. This is, by the way, disadvantage on all crowdfunding platforms, not just on Heavy Finance. If you want to verify certain information, it can be quite tricky as some of the documents are literally scans of the original files, which means you cannot easily copy-paste it in Google Translate. What's also worth mentioning is that Heavy Finance is charging a small fee for debt collection procedures in the case where the loan is delayed. On the positive side, the borrower are also paying fee for overdue payments, which is higher than the mentioned administration fee. Last but not least, the design and navigation of the platform are not the best in the industry, in my opinion. I think that there is a room for improvement to make it look slightly better and more user-friendly. Alright, now let's talk about the pros. Having your funds segregated with a Paysera account is certainly a good benefit. In fact, you are receiving interest from the loan directly to your Paysera account instead of your Heavy Finance user account. This mechanism increases the safety of your uninvested funds. Practically speaking, Heavy Finance will not be able to lock your uninvested funds like Groupier or Fast Invest. Two additional benefits are the rather a low average LTV and the additional guarantee from the Agricultural Guarantee Fund in Lithuania. So those were the main pros and cons of Heavy Finance. Now, you should know that many of the loans on Heavy Finance have not matured yet, which means that you cannot yet evaluate the long-term performance of the entire loan book. While Heavy Finance does share some statistical data, it won't give you enough data to be able to predict the long-term performance of your investments. What you should be certain of is that there will be some defaulted loans at some point and that the quality of the debt collection procedures will be impacting your portfolio performance. As with any crowdfunding platform, there is always risk to lose your money. While Heavy Finance does tick a lot of the boxes, you should always conduct your own due diligence and decide for yourself whether it's a good fit for you. Based on my experience in the industry, I think that Heavy Heavy Finance is suitable for more experienced investors who are looking for ways to further diversify their investment portfolio across secured agricultural loans. If you're just starting out and you plan to invest just a few €100 while having access to instant liquidity, Heavy Finance might not be the best fit for you. So that's been our review of Heavy Finance. We have a €500 skin in the game on this platform at the moment to be interested in monitoring the development of Heavy Finance. If you want to join Heavy Finance and test it yourself, you can use the link in the description below. If you're already an investor, you can share your experience with the platform in the comment section. Thanks for watching, and I will catch you in the next one.